And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today we'll see two Chinese experts debating if China should change the shareholding scheme for automobile joint ventures. China's already surpassed the US to become the world's largest car market since 2009. According to Credit Suisse's research, last year there were 16 million domestic passenger cars sold in China. However, over two-thirds of them came from joint venture car companies. Large state-owned companies heavily rely on foreign car sales. This is not what the government planned when it opened up the foreign car brands originally. The Chinese government wanted to expand the market share of Chinese brands by using the advanced technology of foreign companies. But foreign car brands have been able to expand their brands without solely giving up their technology. The Chinese government doesn't want to support foreign car brands in China, so they make it difficult to sell non-Chinese cars in the country. They ask foreign car brands to set up joint ventures when they come to China. It also regulates that foreign car companies cannot hold more than 50% of the shares. But the persistence of the foreign brands have helped them stay at the top. Chinese experts now believe that this policy is hurting domestic car brands. So our debate today takes a look at the issue from their narrow view on it, and why they're talking about getting rid of this plan. A senior researcher at the Ministry of Commerce, Ma Yu, is one of its proponents of canceling joint ventures. When interviewed by the 21st Century Business Herald, Ma said the government should look at the interests of consumers before those of producers. Ma says this is the fundamental difference between a planned and a market-oriented economy. Ma said that in a market-oriented economy, producers have to make cheaper goods to attract consumers. Ma said this would totally violate the basic rules if the government puts consumer interests after those of producers. Ma said that the protected industry would definitely not be able to survive in a market-oriented economy. Aside from that, Ma also mentioned that joint ventures have existed for more than 3 decades. China's state-owned car companies have gained hundreds of billions of renminbi from this business model, and this hasn't helped develop any of the domestic car brands. Ma said that this situation will never change, even if given another 3 decades. Our financial commentator Cheng Yuan doesn't support Ma's idea. Cheng wrote on his blog that before discussing canceling the shareholding program, people should figure out 2 problems first. One is if the business model curbs market competition. The other one is who benefits from the market competition once the policy is abolished. Cheng cited data from the global market research company J.D. Power. It shows that from 2000 to 2014, car models in China have increased from 43 to 543. During that same period of time, the car models sold in the U.S. market only increased from 230 to 299. Cheng said that this data made it clear which market has stronger competition. Thus, Cheng argued that it's nonsensical to think the ratio would hurt market competition. Apart from that, Cheng also mentioned that Chinese partners are working for these foreign companies. Cheng said that canceling the fixed shareholding ratio would only benefit foreign car brands, and it would damage Chinese state-owned car companies. These companies would lose their value, interest, and the future of China's car manufacturing industry. From the narrow view of these 2 experts, only the interests of the Chinese industry seems to matter. China is well known for allowing foreign companies in, but the high price of taking their technology. And this has allowed China to at least build up its domestic brands. But these brands are clearly far behind the world leaders, which are from Germany, the US, Japan, Italy, and Korea. So even if they get rid of the joint venture program, it won't change demand for higher quality cars.